Hello folks, so I bought Palantir at the open yesterday before earnings and it looks like it's backfired with Palantir down over 8% after earnings. In this video I'll go over the earnings report and what caused the sell-off after hours, what's next for Palantir stock, and finally what I'm doing with my Palantir position. Before we begin, most of you are not subscribed, so please hit that like and subscribe button to get instant updates when I post Palantir videos. And also, I'm not a financial advisor, so take all my content with a grain of salt and seek professional financial advice if you need to. So the numbers overall were pretty decent, but there were some glaring disappointments. They were decelerating US commercial revenue growth, which was driven by decelerating revenue growth per US commercial customer. Furthermore, we saw declining adjusted free cash flow margin, and to top it off, there was no word on buybacks whatsoever. So in Q4 of 2023, US commercial revenue grew 70% year over year and 12% quarter over quarter. However, in the last quarter, it grew by only 40% year over year, which means that growth is decelerating on a year over year basis. However, it grew 14% quarter over quarter, so it wasn't that terrible. 40% year over year growth still sounds great, but remember that Palantir is a hyper growth stock. It's trading on a PE ratio of 280 and price to sales of more than 25. For these valuation metrics to be sustained, Palantir has no choice but to keep accelerating in its growth. In other words, if growth starts to stall in any meaningful way, like it has at Tesla, the multiple compression that Palantir experiences will be painful. Furthermore, although we saw accelerating growth in US commercial customer count, there was not a commensurate growth in the revenue, which means that Palantir is now making less revenue per customer. In other words, it sounds like they have possibly exhausted the supply of tier 1 customers, and Palantir is now attracting lower quality tier 2 and tier 3 customers who have a smaller spending budget. This isn't a disaster by any means, because it could just be a temporary blip and the company might be able to turn this around by upselling more services to their existing tier 1 customers. This deceleration in US commercial revenue growth is probably what caused the smaller than expected upgrade to full year revenue guidance. According to CNBC, the market was expecting a full year revenue upgrade to $2.71 billion, but we got something between $2.68 and $2.69 billion. Another notable miss was the decline in adjusted free cash flow margin. We went from 36% margin a year ago to 23% this quarter. This is a chart depicting the last 6 quarters of free cash flow margin. Also, there was quite a significant drop from Q4 to Q1, but I mean, the overall trend still appears to be up, so again, it's not disastrous. There were a few other things that bugged me though, and one of them was the lack of any mention of buybacks. So I guess they're waiting for the share price to start tanking before they buy back any. I don't know, I just think it's a bit disingenuous to declare a buyback and not actually buy any shares. Another thing that bugged me was the webcast. Not only was there an undertone of off-putting arrogance from Alex Karp with his repeated rant on Western superiority, which I thought was completely unnecessary, they cut the Q&A session short, which leads me to think that they were not interested in answering hardball questions. Dan Ives asked about conversion rates from AIP, which I thought was a good question considering management keep harping on about how great it is for customer conversion, but they didn't give a concrete conversion rate. Anyway, the whole webcast seemed a bit dodgy and I didn't come away from it feeling all that great as an investor. But all in all, this earnings was not disastrous. I mean, total revenue still increased 21% year over year versus 20% in Q4, and we are seeing renewed growth in government revenue, which is good to see. Anyway, that's enough about the numbers. I want to talk about price action and where I think Palantir is headed. Palantir is still above all key long-term moving averages for now, but I want to see it hold the $20 level by the end of this week. If it falls below $20, which is the 40-week EMA, the blue line here, there could be further downside ahead. However, if Palantir can finish this week above $23, which is the 10-week EMA or the orange line, the bull trend is still intact and I might even buy more. So since I am still invested, I'm just going to wait and see what happens, because this could just be a minor setback and I don't want to sell out due to intraday volatility. Furthermore, the Nasdaq is looking strong again, so at least Palantir can lean on the market's strength until the next quarter. That's it for this video. If you haven't already, please hit the like and subscribe button for more Palantir videos. Thanks for watching and see you next time.